Okay, so for this next video lecture, we are still in module number 1. So we will continue with our discussion for the objectives of cost accounting. Okay, so we have here the list of objectives, okay, of cost accounting. First is cost accounting serves as a guide to price fixing of products. Okay, so how can we determine or fix the price based on the product cost? Basically, if you are a businessman or an entrepreneur, so one method of pricing is based on cost. Okay, so there are other methods for pricing, but the most common is based on cost. Meaning, here, first you have to identify the costs that you have spent or incurred in production or in producing your goods. Okay, for example, how much materials were used in a product, how much labor was paid, okay, to transform raw materials into finished goods, and how much other expenses that are not necessarily not necessarily uh, directs to the production of that good, but you need to use the services or facilities to aid in the production. Meaning, these are the items that are not essentially part of the product, but they are used to aid in the production. For example, the electricity used to operate the machine in producing a product. So basically, electricity is not part of the product, but without it, you cannot produce it using the machine, right? But then again, you have spent for it. So this is what we call overhead costs or factory overhead. So those are the main three cost elements that you need to determine and combine to compute for the cost of producing your product. So after determining the costs, based on your cost, you can add a margin, okay? So that you will have a profit when you sell your product. For example, in producing a gadget, a cell phone, for example, your cost of producing, meaning the materials used, the labor paid, the factory overhead spent, it costs 10,000. Okay, and in order for you to have a profit, so you have to sell it above its cost or above 10,000. Okay, so in your case, so how much profit or margin would you want to add up to that? So you can add 1,000, 500, 2,000. Okay, so meaning, for example, if you want to have a margin or profit of 1,000, so you are going to sell it for 11,000. So that eventually, for 1 unit of a cell phone, you will have a profit of 1,000. Okay, so this is how cost accounting and data are used in fixing the price of the products or even the services. We can also use this for the rendering of services. Another objective of cost accounting is to disclose the resources to wastage in various operations of manufacture. So in this case, meaning as in producing a product, since you are accumulating the cost that was incurred, you will know if a certain activity that was taken place or that was applied is necessary or not. Okay, for example, an item or a product was produced, okay, from raw materials will be converted into finished goods. So while the unit is not yet finished, it was placed in a warehouse and you are renting the warehouse, and you just place the unfinished item in that warehouse and you pay for the rent, and this rent or payment of rent is added to the cost of the product. So the question is uh, uh is the product staying in the warehouse important or essential to add value to the product? When the customer use it, it will give them satisfaction? No. So here, this is also one important function of cost that can be used by the management to eliminate the waste and other non-added value activities and cost to the production. Okay, so that's how they control the cost and minimize the cost. Okay, wastage. Okay, for example, a certain item was produced, and then there are a lot of that part, for example, of the product that was not actually incorporated in the product and was just left, okay, in the production as scrap. But then again, you paid for this raw materials purchases. Okay, so here, if this data is known, then scrap or wastage can be eliminated because they or the management can advise or even uh, um, what do you call this? Direct, okay, the employees that they should uh, use the materials efficiently to avoid or to minimize wastage or um, spoilage. Okay, so that's how important cost accounting is also. So another objective is to reveal the resources of economy in production process. So here, as the same as what we have mentioned earlier, as the process stage is being applied or done in the production, so the cost is being accumulated as well. So here, the management will know if a certain activity or item or materials is being used efficiently or is adding value to the product or not. Okay. Another objective, number 4, is cost accounting is uh, also providing for an effective system of stores and materials. Okay, so just like what we have mentioned also earlier, so how efficient does the employees use, okay, the resources, the raw materials in producing the product? Okay. Next objective is to measure the degree of efficiency, okay, of the various departments or units of production. So it follows also as what we have mentioned earlier. Number 6, cost accounting also provides suitable means and information to the top management to control and guide the operations of the business organization, because aside from the cost, the items, the activities can also be disclosed along with the cost. So it can help or aid the management in decision making on how or what items or activities should be eliminated. Okay, number 7, cost accounting also, its objective is to exercise effective control, of course, of costs, time and effort of labor, machine, and other factors of production. So here, what are non-adding value should be eliminated? When we say value in production, meaning these are important activities or materials or process that uh, creates usefulness to the product when the customer uses the product. Okay, so meaning um, adding value is not adding cost. It's on the part of the customer if it satisfies their needs and wants or expectations of using your product. Okay, so that's why you need, or the entity should do a specific task or activity, okay, in order to meet those expectations. That is adding value. Okay? Or in other words, when you say value, it's sulit. Okay, that is the other term on the part of the customer when they use the product or your product. Okay, so again, those non-value adding activities like waiting, storing, should be eliminated. Wastage, also scrap, and what do you call this, spoilage, are also a form of non-adding value activities or factors that should be eliminated. Okay. Number 8, cost accounting also compares actual costs with the standard costs and analyze the causes of variation. When we say standard cost, this is normally what is predetermined or budgeted, or what the management has expected, okay, and or planned. And then this planned costs, it will be compared with the actual cost that was incurred, and any variations, overage or shortage, should be investigated. What are the reasons why a certain division has overage of cost incurred, okay, and should they be punished or not? Okay, so that's another important com- uh, contribution of cost accounting. Okay, number 9, to provide necessary information with the standard costs. To provide necessary information to develop cost standards and to introduce the system of budgetary control. So here, based on the data provided under the cost accounting, so this data can be used to plan ahead for the next accounting period. So this is what they use for standardizing cost, meaning if we still have the same activity next year with this year, so most likely the cost that we will incur next year is the same for the next period. Okay, and also to introduce what method of control system will be implemented to eliminate wastage or non-adding value activities, okay, to the production. And number 10, cost accounting will also enable the management to know where to economize the costs, how to fix prices, and how to maximize profit, and so on. Okay, so these are the important objectives of our cost accounting. So this is very helpful to the management. That's why they cannot do away from cost accounting. It's one integral part of management function that they need to uh, to uh, to aid them, okay, in decision making. So those are the objectives of our cost accounting.